good, guys? Welcome back to the channel. And on this channel, we talk money and all things related to money. So I'm talking things like credit cards, credit unions, crypto, stocks, side hustles, grants, and travel hacks. The reason we talk about that type of stuff is because I believe that if you have self-confidence along with access to capital and a great plan of action, you will level up financially. It's just that simple. It's not a matter of if, it's a matter of when. Okay, so if that's the type of stuff that you like, do me a favor, support the channel. Go ahead and hit like, subscribe, share, and pop the notification bell so you know when something new is dropping. And trust me, you don't want to miss any of these gems. Today's subject of this video is credit, and in particular, it's the credit score. And even more particular, it's how I took my credit score from being in bankruptcy, a total financial zero, to scores in the 800s, and how I did it step by step. All right, so make sure you stay all the way to the end because you don't want to miss none of this. All right, so I was bankrupt about 11 years ago now. When I came out of bankruptcy, the first mistake that I made was I waited over a year before I started my credit rebuild. I don't know why. I thought I had to. I didn't know what I know now about credit, but I waited probably 18 months before I started my credit rebuild. And I started my credit rebuild with a secured card. That was the very first move I made. Was I got a secured card from US Bank for like $500 that I put my own money on, and I worked that secured card for about 9 months. And then at the end of that period, I was able to flip the secured card to actually I wasn't able to flip it. I was able to get a Capital One account. And I'm going to tell you why I couldn't flip the US Bank secure card. I couldn't flip that secure card because I fell under the 60-month rule. So you need to know this. If you're starting your rebuild from bankruptcy as far as your credit goes, for 5 years, the big box banks are not going to touch you. So I'm talking Chase, Citi, Bank of America, places like that. They are not going to touch you. And I just simply found out by calling the underwriter to find out why my application was denied. And I just simply call it the 60-month rule. So watch out for the 60-month rule. What I did to circumvent that and start to hyperspace my credit rebuild was I went around and I went to companies like Barclays. I went to Discover, and I also got a Walmart card. At the time, Walmart was serviced by Synchrony Bank. They are now serviced by Capital One. And just as a sidebar, if Discover has been included in your bankruptcy, I'm told that they won't lend to you for a while either. So I didn't have Discover as part of my bankruptcy, so I was able to get, within that first year or two, I was able to get a Discover card, I was able to get Walmart, and I was able to get a Barclays. And the very first one was a Capital One for like $500, I think they gave me. Now, how I was able to get from those low limits to having 6 figures, well beyond 6 figures of personal credit and 6 figures of business credit at this point, was I strategically used the cards. Now, one thing you should know, I don't think I've paid interest more than 2 or 3 times in the past 9+ years since I started my credit rebuild. And even when I had a big bill to pay off, I would just make sure that I could pay it off in that month, or I would use tactics like balance transfer opportunities to avoid the interest. But I was able to avoid interest. The reason I was able to get larger limits was I would have large expenses that came up. And when large expenses came up, I would use a credit card to pay for it. And then I would pay the credit card off at the end of the month. And then I would ask for a line increase, since it would have recently shown that I had a large transaction that was done on that card. I was able to do this with Barclays. I was able to do this with Discover. I was able to do it with several other cards in the coming years. And that was pretty much my strategy. Once or twice a year, I would ask for a line increase. Of course, I made sure that I never missed any payments. No payments at all. I did not miss one payment. and I looked for cards that had an easy route to getting approvals for a limit increase. Now, just a quick rundown. Discover's limit increase is a soft pull. Barclays is always a hard pull. It's always a hard pull. So I've only done a solicited increase a couple of times with them. I usually wait on them to increase it for me. Uh, with Capital One, that's also a soft pull. Uh, Walmart is a soft pull. Wells Fargo is a soft pull to be able to get a limit increase. But you're probably thinking, well, how did I get the score up? I got the score up by adding strategically, not too fast. I did this over a period of years. So this is not some magic potion where I'm telling you how you're going to get an 800 credit score in 9 months, because I don't know how to do that. It took me years to build my credit to the point where it got into the 800s. So with some of the cards that I got, I would wait until I had a card for a while before opening a new account. And over time, my FICO Pi just started looking really good, and the scores just kept going up. So 35%, of course, is your payment history. 30% is your credit utilization. 15% is your length of credit history. And then 10% is your pursuit of new credit, and then your credit mix. So where a lot of people get things twisted is they think that they're going to have a great score because they got a couple of authorized user accounts that they got put on, and that really can only help you so much. You got to have your own credit history, and this is why it took me a while. It took me a while because I didn't have any authorized user accounts to be a part of. I just built my credit from scratch. I strategically went after limit increases, at the right times, after it had been a while since I had one, or after I had made a big transaction where they would look at the recent history and say, oh, he just made, used 30 or 40% of his credit line. So then they would go ahead and give me a limit increase. Also, you have to have your credit mix in order. That's a big part of it. So what do I mean by your credit mix? I had all these revolving accounts, and I didn't have any installment accounts, and I got turned down for a cash line of credit, and the banker told me, well, you just need an installment loan of some sort. So I went and joined a couple credit unions, got a couple installment loans, built up some history there. All that is called your credit profile. So my credit profile became stronger. Also, my bankruptcy all this time was still showing on my credit report. It was just removed about maybe a year and a half ago. Now, up until my bankruptcy was removed, my credit score would not get past about 740, 745. That was about as high as it would go with that derogatory. Immediately upon my bankruptcy falling off, my scores shot up immediately all the way into the high sevens into the low 800s, and they've stayed there ever since. So that's kind of how I did it. I basically got a couple of cards. I waited before, like Wells Fargo, I had to wait. I waited 5 years after bankruptcy because they're a big bank, and that was part of the 60-month rule. I looked for limit increases strategically, and the way I did it was I either waited a while, more than 6 months, or I did it when I had a really, really large transaction where the system would see that I just used a large part of my the available balance, and they went ahead and gave me an increase. Now here's a couple myths. One myth is that you have to carry a balance. No, you don't. I just told you, I think I've paid interest 2 or 3 times in 9.5 years. You do not have to carry a balance and pay a bunch of interest just to get limit increases. You do got to have your profile in order. You do got to have on-time payment history. The length of history that you have definitely helps. Capital One right now is one of my smaller cards, but it is my oldest card, so I'll never get rid of it because that length of history helps, 15% of my credit score, and the fact that that additional money is helping me keep my credit utilization, which is 30% of my credit score, low. Okay. Another mistake that people make is they'll go wild on the inquiries. I said again, do it strategically. I tried to keep the inquiries on each bureau at 2 or fewer the entire time. And I think once I might have got up to maybe 4 on TransUnion. But that was it. Also, if you find yourself getting denied, you want to find out why you're getting denied, and then you want to dispute off the inquiries from the denials. But don't dispute an inquiry where you have a live account, because then you could lose the live account. So just remember, guys, having great credit on the personal side is to assist you in being able to get business credit. And once you start getting business credit, you can still use your personal credit, but you'll be able to keep the pressure off your personal credit by using the business credit. And trust me, this having business credit is like it's just the bomb. Once you start getting business credit, you'll still use your personal credit, but you'll be able to keep those utilizations under 5%, which will keep your scores high and have your scores looking like this. Now, these are the scores that I earned over time, and I'm telling you that you can get these type of scores too. Hopefully something that I said in this video gave you some tips on something you should do to start building your credit. If you got other questions, go ahead and drop it in the comment section. I promise I will answer every single one, because I'd like to see everybody with a high credit score, because I know it gives you access to capital. And with access to capital and self-confidence and plan action, you can't lose. You will level up financially. It's not a matter of if, only when. So if you found value in this content, please do me a favor. Hit the like, subscribe, share, support the channel. Go ahead and pop the notification bell too while you're at it. And on that note, guys, I'm gone.